Good morning, students. Welcome back after September examination. Let's start chapter number 6, that is cash flow statement. Yes, cash flow statement. A cash flow statement is a statement that showing the inflow and outflow of the cash payments during a particular period. You know that cash plays a very important role in every business. Without cash, we cannot imagine even a single business. And when we did the second chapter of this book, you people come to know there are so many tools of financial analysis are there, and cash flow statement is one of the most important tool of analysis of cash flow statement. So what is cash flow statement? Before preparation, before the accounting treatment, it is very much necessary to know that what is it. Whatever we are doing, practically, theoretically, you should be clarify the meaning first. So a cash flow statement is a statement showing the inflow and outflow of cash during a particular period. In other words, it is a summary of the sources of application of cash during a particular span of time. It analyzes the reasons for change in balance of cash between two balance sheets. The term cash here stands for cash and cash equivalents. A cash flow statement includes only those items which affect cash. So cash flow statement can be for the past or can be projected for a future period as well. I hope in brief, or if I'll conclude, what is cash flow statement? It is a statement which shows the inflow and outflow of cash during a particular period. Moreover, in other words, if we say it is a summary of the sources, sources means from where the cash is coming to you, inflows. And applications means where the cash is using. These are the outflows during a span of time. Okay, now what are the objectives of preparation of cash flow statement? That why we prepare the cash flow statement? See, objective to ascertain the cash and cash equivalents from operating, please underline, investing and financing activities, because when you just learn the format of cash flow statement, do people come to know that in cash flow statement, in the format, the activities are divided in three types, that is your operating, investing and financing activities. So in all the activity, we can ascertain that what are the sources, means the receipts. We can ascertain in the second point what are the payments for cash and cash equivalents. If I talk about the third objective, it is the net change in cash and cash equivalent, the difference between the sources and the application under these three activities between the dates and two consecutive balance sheets as well. We can find the net change in cash and cash equivalents. The fourth one, to highlight the major activities that have provided cash and have been used cash during a particular period to show their effect on overall cash and balance. Now, what is the importance? No doubt, whatever the objective for which we are preparing the cash flow, it provides all those importance to us. So the main objective behind preparation of cash flow statement can be laid down as under. It is useful for the short-term financial planning. A cash flow statement provides information for the short-term planning of financial needs, since it provides information regarding the sources and utilization of cash during the period, become easier for the management to assess whether it will have adequate cash and meet day-to-day expense and pay trade payable in time, whether it will be sufficient cash to pay the long-term loan and interest thereon, and whether it is enough cash to pay the purchase of fixed assets or not. So it is helpful to ascertain the short-term financial planning of a business. Useful in preparing the cash budget. Cash flow statement is also helpful for the preparation of the cash budget as well. It informs that how the surplus and the deficit of a particular period of cash is to be managed, because every month the payments and receipts are to be recorded. It is compared. So whatever the surplus or the deficit for a particular month, that can be ascertained very easily. Then comparison of the cash budget. The cash budget is prepared at the commencement of the year, whereas the cash flow statement is prepared at the end of the year. Please underline and mark this point. Cash budget is prepared commencement, means beginning of the year, while the cash flow statement is prepared at the end. So a comparison between two help to ascertain the extent of in which the financial resources of the firm has been generated and used according to the plan. Causes of variances between the figure of two statements can be analyzed and a proper corrective measure can be taken. The fourth point is study of trend of cash receipts and payment. Yes, it also reveals the speed at which the cash is generated from the trade receivable, inventory and other current assets, and the speed at which the current liabilities are being paid. It enables the management to assess the true position of cash in future. It also explains the deviations of cash from earning. The firm may earn huge profits, yet it may have paucity of cash, and when it suffered a loss, it will still have plenty of cash. A cash flow statement explains the reasons. It also helps in ascertaining the cash flow from various activities separately. A cash flow statement aims at highlighting the cash flow statement from the operating activity, investing activity, and financing activity. It also indicates that how much cash has been generated and used in these activities. I request every student to keep yourself mute, please. Seventh, helpful in making the this dividend decision. In business study, I hope it is clear to you, there are three decisions are to be taken, which are very important for every business related to finance. In financial management, you people come to know the investment decision, dividend decision, and financial decision is there. So it also helpful in making the dividend decision, because the amount of dividend must be deposited separate in a dividend bank account within a 5 days of declaration of such dividend. Hence, the management take help of the cash flow statement to ascertain the position of the cash generated from the operating activity, which can be used as a payment of dividend. Moreover, it also tests of the managerial decision. It is a general rule that the fixed asset should be purchased from the funds raised from the long-term sources like the issue of shares, debenture, loans, and these should be repaid out of the cash generated from the operating activity. The cash flow statement shows whether this policy has been properly followed by the management or not. And useful to the outsider, cash flow statement helps the investor, debenture holder, banker, lender, supplier of credit, etc. to analyze the financial position of the enterprise, and they can take proper decision on the basis of such analysis. So these are the various importance that you have or the uses of cash flow statement. And when you prepare the cash flow statement practically, you find these uses and importance yourself. Like a coin, it has two sides. No doubt, lot of advantages, lot of uses, lot of importance is there, but it has some limitations as well. A dark side is also there, not suitable for judging the liquidity. It does not present the true picture of the liquidity because it considers the cash only. Liquidity also depends on the assets that can be converted into cash easily. Exclusion of these assets obstruct the true reporting of the ability of the firm to meet the liabilities when it becomes due for the payment. Moreover, window dressing possibilities are there. Window dressing means, you know very well, the fake data or manipulation of the data will be there. So possibility of the window dressing is higher in case of cash position in comparison to the working capital position of the firm. The cash balance can be easily maneuvered, means manipulated by postponing the purchases and other payments and by rapidly collecting the cash from the trade receivable before the balance sheet date. Hence, the front flow statement, if we talk, it presents the more realistic picture than the cash flow statement. The method And also another limitation, it ignores the non-cash transactions. I request everybody to please unmute. On this side, I muted you. I request all the students, please unmute yourself. Kohina, you are, sorry, to mute yourself. You are not muted. Please, it creates disturbance in between. Kohina, please mute yourself. The third limitation, it ignores the known cash transaction. Cash flow statement ignores known cash. Transactions like the purchases of fixed assets by issuing the shares of debenture, conversion of debenture into shares, issue of bonus shares. Hence, the true position of an enterprise can be judged through cash flow statement. So, it ignores the accrual concept of the accounting. It is prepared on the cash basis and hence ignores one of the basic concept of the accounting, namely accrual concept. No substitute for an income statement. A cash flow statement is not a substitute of the income statement which takes into account both cash and non-cash item. Therefore, net cash flow doesn't mean net income of the business. Historical in nature, yes. The cash flow statement is prepared on the basis of the two comparative balance sheets of past years. It means it reveals the information that is historical in nature. It don't reveal the information that is useful in the projected cash flow statement. Now, the difference between cash flow statement and cash budget. I request Kohina to please mute yourself. From my side, I have done the setting, but still it is unmuted. It creates a lot of disturbance to me. Kohina, you please unmute yourself. Mute yourself, beta. Yes, the difference between cash flow statement and cash budget. There is not much difference between the cash flow statement and cash budget. The only difference is that the cash flow statement is prepared for the past period, whereas the cash budget is prepared for the future period. Cash flow statement usually portray how cash was received and spent in the past period. Hence, it is of limited use as far as the thus, a cash budget indicates in which months there will be a surplus cash and in which months there will be deficiency of cash resources. The management can then take a suitable decision to invest the surplus cash or make arrangement for the deficiency of cash at the required time. So, not as much difference is there. No doubt both are prepared for the calculations of cash, but the cash budget is for the period of the future, while the cash flow statement is related to the past period. The most important thing that you should be kept in mind, the cash flow statement just look for above back, but the cash budget just look ahead. So it is a major point that is to be kept in mind while differentiating the cash budget and cash flow statement. Now the question arises, how the cash flow statement is to be prepared. What is the procedure? I'll not explain this procedure because you will get confused. I am just going to the format of cash flow statement straightforward. Let's see the format first, then we will elaborate all these activities three activities that you find. Just let's have a look on cash flow statement that is to be prepared as per accounting standard 3. See, I'm scrolling the screen. See, point A is cash from operating activity. Point B, part B is cash flow from investing activities. C is cash flow from financing activities. And what to do at the end? After having all these activities, you have to calculate the net cash from or used in financing activity. Sorry, net cash increase or decrease in cash and equivalent to cash. And all these in all these activities, the cash and equivalent to cash in the beginning is to be added, and at the end we will get the cash and cash equivalent at the end of the year. The most amazing and the wonderful thing that I want to tell you about the cash flow statement, that whatever you find the cash and cash equivalent at the end of the year, you find this amount in your question as well as a closing cash balance. It means you find the answer in the statement of the question itself. So you can cross check whether you identify the correct answer or incorrect answer. So let's start with the cash flow from operating activities. In this, you have to consider all the inflow as well as outflow. What is to be considered? Inflow and outflow of cash. From which type of activities? Operating. Operating means all those activities which are helpful for the business operations. There are business operations are there, and all the activities that is related to the business operation, that is the operating activity. And profit is directly concerned with all those operating activities. So here the net profit before tax is to be taken first of all. How it is to be calculated, we will discuss later on in the note. Adjustment for cash and non-operating item is to be done. Whatever the items that are already deducted from profits, which are non-cash or non-operating of the business, it is to be added back. Like depreciation is to be added back, preliminary expenses, discount on issue of debenture, written off goodwill, patents and trademark, amortized. Amortized means the written off. Whatever the part of the goodwill, patent, trademark is to be written off, those amortization of asset is to be added back here. Interest paid on short-term and long-term borrowing, interest paid on bank draft and cash credit, loss on sale of fixed assets, increase in provision for doubtful debt. All these items are to be added, and less interest income, all the non-operating income, whatever or non-cash income that you have received, it is to be deducted. Dividend income, rental income, profit on sale of asset, decrease in provision for doubtful debts. So keep one thing in your mind, what are the items that is to be deducted in cash flow statement, it is shown in the bracket. And whatever the items that are added, it is shown simply. In a simple form, you have to show the amount, but whatever the amount is to be deducted in cash flow statement, it is to be shown in the bracket only. In this way, I'm scrolling. Let's see what we have done. First of all, net profit before tax is to be taken here. After that, the various adjustment of non-cash and non-operating items are to be done, in which we have to add the depreciation, preliminary expenses, written off, discount on debenture is to be written off. It is to be added as well. Goodwill, patent, trademark, anything that is amortized is to be added back. Interest paid on short-term and long-term borrowing, interest paid on bank draft and cash credit, loss on sale of fixed assets, increase in provision for doubtful debt, and deduct all those non-operating income, which items are to be deducted. It is interest income, dividend income, rental income, profit on sale of asset, and decrease in provision for doubtful debts. In this way, you just come to know that you will get your operating profit, but before working capital changes. Please mark this point, highlight this. What we get up to the discussion, what we get the see, we get the operating activities we get the operating profit before working capital changes. Please highlight this point in your book as well. What we get? We get operating profit. And which type of operating profit? Before working capital changes. And this you will get here. You will find this operating profit before working capital changes here. Let me clear the drawing first, then I'll use the mouse again and continue. See. Now, you got this operating profit before working capital changes. Now, the effect of the working capital. Working capital means the difference of current assets and current liability. So whenever the current asset decrease, what happen in that case? Decrease in current assets means working capital will also decrease. And increase in current liability means also working capital decrease. So decrease in working capital will be added while the increase in working capital will be deducted. So decrease in current asset or increase in current liability. Increase in current asset, decrease in current liability will be deducted out of that. In this way, you will get a net cash generated from from business operations or from operating activities. Now, cash generated from operating activities, less income tax paid. It is the net of the tax refund received. If any refund is there, it is to be deducted there. So net cash from or used in operating activities you will get here in this column. Two columns are to be prepared. In internal column, all the calculations like this are to be done. In the outer column, you have to show only the cash used in operating activity. The next is our cash from investing activity. Investing means in which the business has invested the money. Where the business invests the money? The business invests the money in all the assets or any type of investment. Whenever the cash is used in fixed assets or the investment, those are known as the investing activity. So what the business will get? Whenever any sales are to be done of fixed assets or any investments sold out, what happen in that case? Sale will proceed from that. Will be the inflow of cash in itself. On the other hand, whenever any of the asset is to be purchased, what happen in that case? Outflow of the cash will be there. If any current investment, non-current investment is to be purchased, then also it will become outflow of the cash. So all the inflow, all the investing activities that are concerned to inflow of the cash, that will be added, and all the cash investing activities which are related to the outflow of the cash, it is shown in bracket and deducted. Afterwards, we will get the cash from investing activity. If I talk about the C, cash flow from financing activities, all those activities which are related or have the inflow or outflow of cash due to financial activities. It means issue or redemption of shares and debentures. Proceeds from issue of shares and debentures, proceeds from other long-term borrowings, and proceeds from short-term borrowings. It is to be shown in financing activity. Means all the activities that is related to your finance. And payments like interim dividend, proposed dividend, interest paid on short-term and long-term borrowing, interest paid on bank draft, payment of loans, redemption of debenture, in which cash is utilized for the financial activities or financing activities. The cash outflow is to be shown in the bracket here. In this way, you will get the net cash from financing activity. Now, after adding all these three, A plus B plus C, you will get the net increase or decrease in cash or cash equivalent. Now, what to do? After having the net cash or cash increase or decrease, cash and equivalent to cash in the beginning of the year is to be added, and at the end we will get the cash and cash equivalent at the end of the year, means the closing balance we will get. See, first of all, we have started the question with net profit before tax. The question arises that how the net profit before tax is to be calculated. The profit of the current year, means after appropriation is to be done here, we have to add, it is not showing clearly, it is add, transfer or reserve, means whatever the amount that is transferred to reserves at the time of profit, out of profits, it is to be added back. Any proposed dividend, any interim dividend paid during the year, provision for tax made during the year is to be added. But if any refund of tax is there, it is to be deducted. So finally we will get profit before tax. Whatever the reserves, whatever the profits are to be deducted out of current year profit, it is to be added back, whether in the form of terms of reserves, dividends, proposed dividend, interim dividend, provision for tax, whatever you have deducted out of profits, it is to be added back, and refund of tax is to be deducted. In this way, we will get the profit before tax, and we have to start the cash flow statement with profit before tax. In this way, we have to do this. And here the flow charts are given to us, the cash inflow and outflow. In operating activity, what are the inflows? Cash sales, cash from royalty, cash received from debtors, cash purchases. These are the outflows: cash paid to creditors, payment of operating expense, payment of income tax. If I talk about the financial companies, because financial companies are all those companies which are deal with finance, their product is finance only. So in that case, interest and dividend received in cash, proceeds from sale of security, loan and advance repaid to third parties is the cash inflow, and interest paid in cash, payment for purchase of security, loans and advances to the third parties is the cash outflow. So please keep in your mind from theory point of view, definitely you will have a question that for the financial company, what are the cash inflows or the cash outflows. So please keep in your mind. In case of operating, it is to be identify only. In case of investing activity, all the proceeds from sale of fixed assets, proceeds from sale of non-current investment, interest received on debenture, dividend received on share, all these are the cash inflows for investing activity. And cash outflows for investing activities are purchase of fixed assets, purchase of non-current investments. And financing activities are all those activities in which finance related transactions are to be dealt. These are the cash inflows: proceeds from issue of shares, proceeds from issue of debentures in cash, loan raised, increase in balance of bank overdraft and cash credit. And what are the cash outflows? It is payment for buyback of equity share, payment for redemption of preference share, payment of redemption for debenture, repayment of loans, payment of interim dividend, previous year proposed dividend, payment of interest on long-term and short-term loans as well, payments of interest on bank overdraft as well as cash credit, payment of preliminary expenses. Don't forget including share issue expense, decrease in balance of bank overdraft and cash credit. It is all about the inflow and the outflow of various activities, that is our operating activities, that is our investing activities and financing activities. So in this way you have to do the format. Now I stop the recording and explain each and everything to you. If you have any query, please ask. You have to draw this format 2 times in your fair notebook. I hope everybody is listening me and you listen so well and concept is clear to you that how the format of the cash flow statement is to be prepared. Now if anybody, I'm just going to unmute everybody. If you have any query, please raise your hand and ask. Please raise your hand if you want to ask anything. Nobody have any doubt? Everything is clear to everybody. It's amazing. If it did do so, then everybody has to make me learn the cash flow statement tomorrow in tomorrow's lecture. All has become so genius. It's fantastic. Clear to everybody? Okay. Please raise your hand and let me know the answer for how many activities the cash flow statement is divided. In how many parts cash flow statement is divided? Raise your hand, please. Only Mansi Rana every time take the initiative to give the answer. It is very bad. Well, what about the others? Others are just sitting dummies in the class? Okay, good, Kanika. Mansi, you please give me the answer. In how many activities the cash is divided? In how many activities cash is to be divided, beta? Mansi, unmute yourself, beta. And see how many activities, in how many activities cash is divided?
Good morning, ma'am.
Yes, good morning, beta.
Ma'am, 3 activities: operating activities, investing activities, or financing activities.
Financing activities. Operating activities is just different from two various type of businesses. Which are these?
Financial business and non-financial business.
Very good. Financial business. Financial business are all those business which are dealing financial instrument as a product. Yes, which are dealing in finance. And other are the non-financial which are not dealing in finance. They are just dealing in other. They are doing the financial activity, but they are just doing other activities like any cloth merchant is there.
Production activities.
Any of the production activity, any of the selling and trading, buying and selling, they are doing. Very good.
Yes, ma'am.
Thank you, beta. And any doubt, whatever we have discussed in cash flow statement? Format
No, ma'am.
you. If you have any doubt, then you may ask.
No, ma'am. Format is clear.
Okay. Anybody have any doubt, please raise your hand. If anybody have doubt, please raise your hand, then I'll solve your query. Okay. Now I instruct everybody to prepare the format 2 times and send PDF to me after the lecture. Fine. When your classes will be over, please send me the format of cash flow statement. Prepare twice in your fair notebook. Prepare the flow chart of inflow of all the activities and inflow and outflow of all the activities. So please do it, and thank you. Have a nice day.